we should perhaps get going.
Okay. No objection.
Let's go.
I'm just going to open the agenda. Sorry, a little slow. Do you have Martha, John?
Yeah, let me.
Hi, Martha.
Hey there.
Here's Martha.
Okay. There you go.
Okay. It's. I think it looks like it's pledge time.
Well, would you like me to establish quorum
Yes, please.
first? Okay. Chair Colcat,
Here.
Commissioner Callback,
Here.
Commissioner Richmond,
Here.
Commissioner Frey,
Here.
Commissioner Claris,
Here.
Commissioner McClatchy.
Here.
All members are present.
Take your temperature and bring your candy. No? Okay, great. We have quorum. Time for a pledge. Should I lead you on?
Sure, go for it.
I pledge allegiance
Pledge allegiance to the flag
of the United States of America
United States of America
and to the
and to
republic
the republic for
for
which it stands,
one nation,
one nation, under God,
Yeah. Indivisible.
indivisible,
justice and
liberty and justice for all.
Super. We got through that. Okay. I don't see anybody from the public.
I don't either. I don't see anyone who
Well, I think
maybe-
I qualify for the minute, I guess, but
You do. And would you like to provide comments on items not on the agenda?
no, thank you.
Okay. We're no one wishing to speak then on items not on the agenda.
Okay.
But maybe if Chair Calcat, if I could take a moment and formally introduce a couple of people. We just heard from Mr. Art Whipple, who was appointed to the commission, and as mentioned earlier, will fill our 7th seat beginning here in a couple of weeks. So we're excited to have him on board and part of the team. He's here doing his homework and making sure he's staying on top of what's going on with the commission. And so congratulations to him on being appointed, and to those who are reappointed, congratulations to you as well.
Thank you.
And then the other individual I'd like to introduce is Mr. John Furtado, who is the city's new finance director. And
Yay.
he is now about 9 or 10 hours into the job. So we
That's great.
made sure we set it up so that his first day he had a financial commission meeting and could come and see you. And so we are excited to have John on board. And like I say, maybe nobody is as excited as I am, but we certainly are excited to have him on board. And John, I don't know if you want to take just a moment and introduce yourself. And
thank you, John. So, as most of you know, I've joined from the city of Walnut Creek, where I headed the finance department. I'm really excited to get here into Los Altos and work closely with the commission and city manager and council and be a resource to all of you.
Welcome, John. Thanks for being here. Appreciate you being here. Art, do you want to say a few words too? We skipped you, but it'd be great. We're looking officially, I guess you start next month, but since you're here.
Sure, I can take a couple of minutes. I guess I've been about 50 years as an engineering and financial executive, mostly in the semiconductor business, but I've done strange things like run a seawater desalination business in the Caribbean and was a CFO of a high-end audio electronics company and done a number of things. I'm an active ham, so I'm part of Larry's, the Los Altos Amateur Radio Emergency Service and a CERT. I took my last paycheck on October 28th. I was left the last board I'm on, so you have me. Now I'm working harder than I ever did, but I don't get paid. So I'm really excited to join you folks.
Okay, welcome.
Welcome.
Okay, so I'm sure we'll hear a lot more from you, John. Thank you very much for being here today, and this is going to be your agenda going forward. So welcome.
Thank you.
All right, super. Now you just have a few more positions to fill, and then we'll be all good. Okay, so on to the agenda then.
Yep.
John?
Are you seeing it there?
Yeah.
Yep.
Yep.
The draft minutes from last meeting. And we're excited to see some movement on the PERS reserve. So we'll have a presentation. Is that, or is that, there's gonna be more than what was in the packet, right?
A little bit more, yeah.
Okay. And then the 5-year look ahead that you've done, a quick one, so we can give you some feedback on that.
Yep.
The PERS is the only one where we are voting, right? The financial, the planning is just for information only, right?
Yeah, so we'll take a minute to approve the minutes from the last meeting, and then I have asked for a vote or a recommendation from the commission. Of course, we'll let you ask your questions and have discussion and determine the best way to go from there.
Great. Okay. All right. On to the minutes then.
Hey, Kuljeet, I try not to comment on the minutes, but one thing, I didn't think we really had 2 agenda items with Monique. And I also didn't think we deferred anything to the future, but maybe that's just me.
That sounds right.
So
Yeah, I would say
so
that.
can somebody put it up on the screen? Then I can just articulate
Yep.
how I would edit this and we can be done with it.
Yeah, she gave one presentation that sort of covered both items.
Yeah.
Yeah.
Yeah, so, and maybe there were 2 items on the agenda. I might combine them. The things I would take out, John, is the additional discussion will be scheduled. I just don't think we kicked the can on anything
Yeah.
that I remember.
Okay.
If there was a second agenda item 3, I just think saying a high level overview of the financial health of the investment report. Just,
okay.
If we can combine, look, left to my own
2 and 3
devices for 2 and 3, I just have them both have the same item as, Monique gave a review and we asked questions and then move on. But other than that, I had no comments.
Okay.
Move approval on as amended.
Second.
Second was Kuljeet.
Yeah.
Okay, thank you. I'll call for the roll. Chair Colcat,
Yes.
Vice Chair McClatchy,
Yes.
Commissioner Callback,
Yes.
Commissioner Richmond,
Yes.
Commissioner Claris,
Yes.
Commissioner Frey.
Yes.
Passes 6-0. Thank you. Okay, would you like me to jump into discussion on PERS?
Let's do it. Yeah.
Okay. So I won't add too much to the what was in the staff report. I think you guys know a lot of the history behind the PERS reserve, or more importantly, where we are at today. As you all know, we have $5 million sitting in a fund intended to be used for PERS in some way. We have done a preliminary analysis, and I'll actually pull up the spreadsheet. And the spreadsheet that I'm sharing with you is based on a tool that CalPERS actually provided to us. to do some playing around of if we funded a little bit more of our unfunded liabilities, what that might do to our annual costs, as well as our unfunded liabilities, et cetera, and our excuse me, funding of those liabilities. Anecdotally, we have several different funds, two of which make up the bulk of our unfunded liability. The other four each are in the hundreds of thousands. These two are in, I think one is about 19 million and one is about 23 million. So for the purposes of this discussion, we didn't really look at anything to do with the other four funds. We solely looked at the two large. One is for miscellaneous employees and one is for safety employees. And so the analysis we did was simply taking the $5 million, sending it to PERS, splitting it between the two. So 2.5 million to the miscellaneous, 2.5 million to the safety fund. The spreadsheet you're looking at, of course, is broken down by fiscal year. The costs, the lines 5 through 8 are if we were to do nothing. So if we kept the $5 million for ourselves, didn't pay any extra, what our costs would be. And this tab that I'm showing you is the combined cost between both plans. We could look at for miscellaneous and look at for safety if you like, but sort of for this discussion, we said, well, let's look at them combined. So you can see our normal costs up here, as well as our UAL payments, and then the total employer cost for each year. If we were to like I say, do nothing, keep the $5 million and use it for something else, or keep it tucked in between the couch cushions like it is right now. One other thing that I should note on this is this does not build in any future assumptions, such as PERS lowering the discount rate, or the stock market and the investments taking off and PERS returning at having incredible returns. Doesn't take into account any downturn in the economy, anything like that. It's simply if conditions of today continue out indefinitely. And so you'll see, like I say, lines 5 through 8, those are if we keep the dollars. Then if we send the money to the $5 million and send it to Sacramento, that is what lines 10 through 13 represent. And then lines 15 and 16 are the difference between the two. And so without really doing any in-depth analysis, because there's different portions of plans that you can choose to pay, which will give you a little bit more, or if we were to put, say, 3 million towards the miscellaneous plan and 2 million towards the safety, that might affect the overall, the overall costs, et cetera. But without doing any sort of that, we would reduce our first year, so the current year costs, by about $270,000. And then moving out each year, you can see until about 2039, 2040, we'll continue to see expected lower costs than what we would be paying if we were to hold the monies in reserve. The one thing I've neglected to mention as well, this also doesn't assume that we might make another payment in 5-10 years, or we might make a payment of more than $5 million right now.
I have a question.
Yes.
If CalPERS has a lower rate of return, would the savings be even larger?
That is a great question. I might ask John if he has some insight on that. As again, he's the expert now, and so if he can maybe help answer that question.
John, to answer your question, if the interest rate is lowered, then the savings would decrease.
I'm sorry, did you say increase or decrease?
They would decrease. You would have lower savings because what CalPERS is doing is they're saying that 6.8 is the discount rate that they're using to bring the future dollars to today's value.
Got it.
So when you reduce the discount rate, you have a lower gain today.
No, I understand. Okay.
I think one thing anecdotally that we've seen is the better, or the longer that PERS does well on their investments, the more hesitant, or the less likely they are to lower the discount rate. It's when they when they have a stretch of time where they're not realizing the what they thought they were going to realize, that's when they start making the decision to lower the discount rate.
So 6.8, is that where it is now?
That is where it's at now.
Okay.
Yes.
The discount rate? They lowered that recently from 7 and then 7.5 before that, if I remember right.
Correct.
Yeah.
So what is our total negative position with them? What to bring it even with their assumptions? How much money would it take? Is that question clear?
Well, our unfunded liability is quite large. Obviously, we won't pay all of that, right? So, I mean, because
No, but if you look at our deficit, basically, is it in the neighborhood of 10 or 12 million dollars?
The unfunded. You're asking the unfunded liability.
Yeah, unfunded liability total. Yeah.
Closer to 40.
Yeah, 40 was what I remember
40.
getting.
Okay, that's right. Okay.
And again, 40, I think in this world, John, help me, is not the withdrawal liability. It's just the math. If you want to withdraw, it's even more. But I think 40 is what we're left that we have to work off over time.
Yeah. One thing I didn't talk about these lines down below, but these do show this lines 19 through 22 are our liabilities, including our unfunded liability, which
there you
as
go.
of this year is 46.7.
Yeah.
And then lines
24
through 27 is if we send the 5 million, what it does to our unfunded liability. You see, our market value goes up, and then the UAL drops.
Yeah.
Right. Okay.
So John, you said something critical to, I mean, obviously, I mean, the converse is what we have to decide, right? Which is that what is the opportunity cost to keeping this money now and not sending it to them? Mm-hmm. And you said that that if you look historically, CalPERS has not, in good times, they've kind of stuck to their number. And only in bad times, they've actually started, lowering the discount rate, hence increasing our liability total amount. But it doesn't work the other way a lot. So you don't gain a lot by saying, oh, well, there might be a huge win in the stock market and the economy might be going better than normal for the next 10 years. So we should see our 40 million to come down to 30. That scenario doesn't play out historically speaking.
Right. And I would say my statement earlier was entirely anecdotal. I think that there has been a shift in mentality at PERS of we need to look at this and get things under control a little bit better. And I'm not a financially minded person, but I do understand the political side a little bit. And I could almost guarantee that they're never going to increase the discount rate. If anything, they'll continue lowering it, which will, of course, drive our costs up higher.
So if we have the funds, paying it early helps, and keeping it does not, could potentially hurt, but because it could go up, our liability could increase. Yeah. So, and then the other question we had before was at which line we pay off, and you touched on that a little bit as to if we pay off the safety one or the other one.
Yeah.
Do you have some understanding of how that works, or how will that how do you come to that conclusion as to what to pay, which
Yeah.
how much to each line?
And I'll let John go into a little bit more in depth of the analysis, but that's not something that we've fully looked into. We wanted the direction of, yes, we're going to send the money, and then staff figure out exactly how much to each line will give us the sort of the greatest return for sending the dollars there. But I'll let John weigh in.
Yes, so we'll have to look at the tiers on, there are several tiers that are being amortized over different time periods. And we'll have to look at which one makes the most sense to pay down first. That would give us the biggest bang for a buck today.
Mm-hmm. Yeah, the worksheet or the workbook that we use to come up with this spreadsheet doesn't go down to that level. It's at these funds, you can pick which one you want to apply to, but it doesn't break it down by, okay, you have this much money in a long term and this much money in a short term and whatnot. And so that's the direction and the sort of the leeway that we're asking the commission to recommend to the council to provide the staff of, go do that work with PERS and figure out exactly where, which lines the dollars should be paid towards.
So PERS would advise us on that. If we say, hey, we have a chunk of money, where should we apply it?
I don't believe so. Again, John's worked with them before. They won't help us, but they have the worksheets and the data to show us, okay, these are the tiers and how much is in each line and whatnot. The tool that they provided us for this analysis, again, is just at the group, the fund sort of level, not the detailed.
Okay.
So you're looking for comments yet? I've got some I'm glad to offer.
Sure. Yeah, we're happy to answer questions, take comments. Would you like me to take this off of the screen so you can see everybody?
Yeah, that's a good idea. So with a $46 million deficit, if we had $46 million extra instead of 5, I would say we probably wouldn't want to pay it all down because things change. But with 5 out of 46, it isn't going to make any difference if things change, because they're not going to change that much. So I wouldn't worry about overpaying. I do worry the other side, and Anita wasn't a part of this, but in the past, it has appeared to some people on city council that we have a lot of money. So this extra 5 could kind of get lost as extra money, even though it's kind of allocated for PERS. So I think it would just help the discipline to go ahead and pay it down. And then you look at the numbers and I think it pays. I think it's better than what we can do with the money on the market. So I think there's several reasons I would like to see us apply it and have John Furtado do the work to find out where, but send it in.
Yeah,
I agree with Gary.
Yeah, and maybe Gary, go in another sentence or two, and you guys will tell me I'm looking at it wrong. To me, this is purely a liquidity question, right? Do we have enough of COVID behind us, and we have enough of a line of sight on real estate taxes and the money we're going to get from the government that we're not going to hit a liquidity crunch? It seems to me the answer to that's yes, but we can tell it's John's first day because he's still wearing a necktie, so he can give us that answer when he's got rid of the tie. But to me, it's only a liquidity question, because if it's a money in the cushions question, it's pretty easy, right? Remember when we had Monique in, the city's cash was earning 89% on cost 89 basis points on cost. Numbers clearly lower on mark to market. Let's make up a number, 50 basis points on mark to market. 270,000 on 5 million is 5.4% instead of 50 basis points, right? So we're clearly better off,
Yeah.
as long as we don't need the money to keep the lights on, to pay the police, to do something important. So that's been my point of view for a long time. Gary, your point of get it out of here before it can be misused, I'm fine with that too, but it's a good use of the money. And then the only question I had for John, which is a technical one, I asked this question before and I was told we can do whatever we want. In private industry, when you have multiple work groups, there's, and whether it's ERISA imposed or simply the politics of it, selectively improving the funding of one work group over the other. And in a world where I spend a lot of my time, making a contribution to the pilots and not the flight attendants, you'll have a tough day at the office the next day if you get caught doing that. I just want to confirm, I've always been told, or at least I asked the question once, not always been told, that in a public employee pension world where the full faith and credit of the city and the state stands behind this money, we can pick and choose where we repay and which work group we repay without a work group saying, well, why'd you make the cops pension more solvent than the other workers? I just want to make sure that's okay. We can pick and choose.
Yeah, I would say yes. Frankly, we're going to have to pay all of this anyways. So whether we pay it now or we pay it in the future, the employees are going to be, their pensions are going to be solvent and funded in some way.
Yeah. And just to add to Tony's comment, I mean, we started this dialogue about 3 years ago, Tony, or maybe or something like that, and then we put it on the shelf because of COVID. We thought maybe if the city has a solvency issue, a cash crunch, we want to just hold this off. But I think we're on the other end of it, and hence probably this was pressing then, and it's pressing now because of just the math. I mean, the 5% versus 0.89% is significant, and I think I'm fully in support of doing this thing. I have been for 3 years now.
Yeah, my first notes on this topic, Kuljit, are in January 2018.
2018, there you go. So it's quite a while. Yeah. Mark, I know you're in favor of it. Martha, any comments? Any thoughts?
I have a question. Does the budget reserve any additional funds for the current fiscal year?
Let's look at the 5-year projection, and I think you'll see that we are running pretty skimpy on the 3-4% growth. Although I think you're sandbagging the revenue top line. I think we'll get more than that, but so maybe there is. But if you don't mind, we'll hold off when we look at the 5-year budget.
Okay, because I agree with everything Tony and Gary said about the 5, but wonder if we're going to reserve some more in the coming year. Maybe it would even make more sense to, go to 6 or 7.
Yeah, and that's actually a fantastic question, Mark. And the way I tried to structure the recommendation would allow for if we find that there are additional funds, or we move some funds around or free up money somewhere to send at least 5 million. But if there's some more that we could send, including that as well. And sort of as Kuljit alluded to, when we get to the 5-year discussion, I can talk about where some of those dollars might potentially be working.
Great.
So
Martha didn't get to talk.
Yeah, I'm also agreeing. I'm agreeing with you, Gary, and Tony's comments as well. I'm in agreement.
Thank you.
John, any thoughts?
I think we get a much greater return if we pay CalPERS. I think Tony's comment with regard to it, the number of basis points we get from our bonds is quite small. And a return such as we're going to see is much more beneficial.
Okay, I think we're ready to vote on this.
Move we recommend to City Council that we pay down $5 million as staff to decide exactly how to allocate that.
I think I would just make the one correction, and Gary, we should recommend a timeline within which it should be paid.
Okay, I don't know what the feasibility is. How long to get staff to look at so a month or two at the most?
I mean, till the end of December, but I mean, within this current fiscal year, I know.
I agree. We should put a time limit by the end of the calendar year.
End of the calendar year, yeah. Not the fiscal year.
Okay, I'm for it.
Can I also ask for a slight modification or a clarification, I guess? You said to send 5 million. Is that at least 5 million or just
At least 5 million or more.
Okay,
or
thank
more.
you.
By the end of the calendar year. Okay,
Okay, yeah.
And if we
motion made.
Somebody like to second it?
I will.
Second it.
Mark can have it. Mark loves this topic, so Mark can have the second.
Okay.
I was gonna say, wait, I love it too. Can I make the second?
Yeah, no,
You can.
my vote's ready for a yes, but let Mark
Okay.
second it.
Chair Colcat,
Yes.
Vice Chair McClatchy,
Yes.
Commissioner Callback,
Yes.
Commissioner Richmond,
Yes.
Commissioner Frey,
Oh, yes.
Oh, yes.
Commissioner Claris.
Yes.
Thank you. Passes 6-0. Thank you all very much. I know you guys are excited about it. I think we're excited about it as well on staff, and this is a fantastic, fantastic step for the city to take.
Yeah.
And so, in terms of timing, I will do everything I can to get this on for the next city council meeting, so that they can hopefully take action and give staff the direction and get us moving, so we can hit it before the end of the year.
Good.
Sounds good. Okay. All right, our next topic.
Would you like me to start?
Yes, please. Go ahead.
Okay. So as sort of described in the staff report for the 5-year financial forecast, I wanted to just take a minute to kind of present some numbers that really I will caveat with they're only good until really we're done talking about them tonight, because after today they're all going to change and all be different, and in a few months we'll have some more accurate numbers, particularly for last fiscal year. We'll have some updated numbers for this coming fiscal year, but at least will help give an idea to the commission of where our financial status is, where we might be moving forward, and what decisions like the one that the commission just recommended to the council will help as we pull and push levers and affect the finances of the city. And so I'll call up this spreadsheet here. And this was in your staff report. And so I'll just kind of walk just really briefly through some of the numbers, and then we can talk a little bit about what certain actions might, how it might affect the city's budget moving forward. As you can see, we have 2 years of actuals. It's 18-19 and 19-20. The numbers for 2021 came from when we presented the mid-year budget update. Of course, the year has ended for 2021. We're currently in the process of auditing those numbers. In a few months, we'll have the audited financials. But so these are the numbers that, as of February, March timeframe, we projected for the coming, or for last fiscal year. The numbers for 21, 22, and 22, 23, those come directly from the budget, which was adopted by council in June.
Mhm.
And then the numbers for the last 3 years use some flat assumptions to get to those, including what I would consider fairly conservative estimates, particularly in terms of revenues. As commissioners are aware, because of the pandemic, our recreation fees and our transient occupancy taxes were really affected. And rather than having those numbers or those revenues come back sooner, I've kind of pushed those out, I think, to 24, 25 before we actually start seeing return to pre-COVID levels. If you were to ask me honestly, I think we'll see them earlier. But for the purposes of planning, I felt it was better to push them out a little bit than bring them too soon and miss in that direction. Of course, the city's property tax is the primary driver of the city's revenues. And that has I used a very conservative growth estimation of 4.5%. I've been here 12 years and I don't think it's ever been less than 5.5. And in fact, some years it's been double-digit growth. So I would anticipate that we'll see, I will hope that we will see better than 4.5% in terms of property tax. And so as we look at this, excuse me, you'll see our revenues over expenditures. Of course, as part of the budget, we anticipated $0 for the 2 fiscal years that we just adopted. Of course, I talked a little bit about as we move the levers back and forth. One of the levers that you just recommended to council is to send money to PERS, which will lower our expenditures. And so these line items here, of course, will go down by those rates that they go by the expenditures that we would have paid. As well, there's some other actions and items that may free up additional dollars. For example, tomorrow the council is going to receive a sort of a quick update on the American Rescue Plan Act dollars. That's the $3.6 million in these 2 cells. Some of those, when we adopted the budget, some of those dollars were left in the general fund. Some were transferred out. The discussion tomorrow will be about leaving those in the general fund, and so that would further lower this amount here. I believe this amount here. I believe the first year it's about $1 million, and the second year it's about $1.2 million. And of course, that then will end up in this line item here. There's some other actions that potentially could be taken. Currently, we're paying the loan for the community center out of the general fund. If another funding source could be found for that, that would free up additional dollars. If there's anything else that we've been paying out of the general fund that could be used or could be, that we could use other dollars for, that of course would also alleviate relieve some of the pressure on the general fund and the expenditures. And so one of the things that, as we look at, this is probably a chart that you're very familiar with. This is our general fund fund balance summary. You can see that the first line is the unreserved fund balance. That's basically what happens when we take this amount here and add it to the unreserved fund balance, obviously. Of course, we have our operating reserve. One of the things that I did not include in here is increasing the operating reserve to match the 20% goal for the operating reserve. As well, I mentioned I did not take out the $5 million of the PERS reserve. And so if we take that out and then lower our expenditures, of course, then this dollar amount up here will increase. And so, like I say, there's a lot of different levers. There's a lot of different data that can go into this. But I think to answer some of the questions, or I think the commission has already came to that conclusion. And so I don't really have to do too much of convincing, but anything could happen tomorrow. The Lambda variant could be the worst thing in the world and we shut back down and our revenues start dropping again. But taking off my finance director hat and putting on my city management hat, things are starting to look up. We're definitely seeing the recovery, and it is not too far distance that we'll start seeing additional, our revenues increasing and our expenditures hopefully not increasing at a commensurate rate.
Great. So kind of a stable future, back to the future, right? I mean, back to, as it was before 1819 was sort of a stable time for us. Can I ask a couple of quick questions for a few rows? So on the revenue side, I see that, you've done the 5% growth. That's great. And the fees are basically TOT and sales tax, right? That's it?
No, so the TOT and sales tax are included in line 3. Of the taxes.
And what's in fees?
The fees would be community development fees, recreation fees, our franchise fees are there.
Okay. So yeah, my question was actually, so the other big source of revenue for the city is Park and Lou. That's not on this, right? So we are keeping that as a separate fund and outside the general fund until we decide, or the council decides to use those funds to pay off general fund debts or anything else.
Correct. Those are not in, this is solely looking at the general fund, not looking at dedicated funding.
So that's very important to clarify, because I think that's a large pocket and that's a large bucket of money that potentially with all the new development, and if 50 comes back live, etc., can swing things quite a bit for us as a city. And then so that's sort of the big thing. And then the transfer in, transfer out, if you could sort of, explain that, because even when you showed sheet 2, some of this, I thought the revenue over expenses, we actually put it in the CIP bucket, right? So it doesn't all go into the fund for next year. So you're showing it as if it all carries forward into the general fund, which is not, I thought, how we do it.
Right. So the transfers outline, as shown here, of course, we only have, you'll notice that as we get to the future years, those are very low. I'll state right now, the bulk of the 817, 842, et cetera, is the community center loan payment. That is included as a transfer out. We transfer it out of the general fund and use it to pay for the community center loan. For 21, 22, the bulk of those are, excuse me, that's primarily, again, community center loan, as well as the remaining American Rescue Plan dollars, which we had said, well, we'll transfer those out as well. Transfers out also includes payment of some certificates of participation from 2004. I believe it's about 100,000. But then as we look at past years, you'll see that's where the bulk we have very large numbers. And that's when we were transferring dollars out to either the capital improvements fund, or we put it into, say, PERS reserve or one of the reserve funds. That's what's included in the transfers out.
Could I make a request, John?
Yes.
What would be great on a chart like this is if we could get on each column a delta from year to year for each one, because that way we can easily look through the calculation of how, like, say, take for example, executive, goes from 3.9 to 6.4. It'd be nice to see the delta variances on a yearly basis.
Okay.
And the other one that would be very nice is you've made a lot of assumptions and, you know, they're very good. It'd be nice if there'd be some footnotes at the bottom as to what those assumptions are.
Okay.
And, you know, just a simple one that you assume that the growth in revenue would be at 4.5%. On a large transfer out of the 17.8 million, maybe a little note for something like that, why that was so much larger than the other ones, so that people can go back to this as a working document and say, well, this was the assumptions at the time, and this is what we were thinking.
And that's a fantastic point. I really appreciate you actually mentioning that and bringing it up. I will show I have unhidden, if that's the way to say it, unhidden certain columns and rows, which will show, includes the notes on what the assumptions that I included, because I thought
That's good.
somebody might ask a question about, well, what was the assumption for this, or what was the assumption for that? And I wanted to make sure that I had them handy, but to keep it clean for report and presentation, I sort of condensed it down. But it's very, very fantastic point. And
so actually, John, I think you brought up a point that maybe we should discuss, which is the executive line.
Mhm.
The bump in it, if I remember correctly, is because we lumped legal in that, correct, John?
Correct.
So for transparency, is it necessary that we should show that that's actually not just that we just hired some hotshot? It's not, most of the executive is payroll, right? I mean, and then we have this big chunk called legal in it. So should we have that as a separate line, just because that's the only line that sort of has this huge jump, and then it's kind of hard to understand. The rest of them kind of are kind of fairly understandable. Most of them are payroll.
Well, that invites an interesting question, because wasn't it a $2.9 million growth in legal fees? And is that continue out to the future?
And I very much appreciate the question. I'll kind of say, for the purposes of this exercise, I don't know if that's necessary. And the reason being is the reason for the jump is included in our the explanation is included in our, I'll call them formal financial documents, our budgets and our CAFRs, that really explains why the jump in the executive line. And the purposes of this is more of just, if we project out or if we continue things out, what they might end up as. You're exactly right that if for a reason or another legal fees come down, then obviously these numbers in what column G through I will come down as well. And that's kind of getting back to the point I tried to make at the beginning of this discussion of, you know, these numbers are good really until we're done talking tonight. And if something happens next month, then we should really be looking at and updating. And when we have better information, refreshing these projections and understanding, okay, this big expense that we were anticipating didn't come. And so, you know, we adjust the numbers accordingly. Or, for example, the state says, you know what, out of the generosity of our heart, we've got a, you know, $20 billion surplus. Cities, here's a flat one-time contribution that you don't have to pay back, in which case we dump it in our one-time revenues and our numbers adjust that way. And so kind of what was suggested in the staff report was, we have this, let's look at this again when we have our audited numbers as well as our projected numbers for the current fiscal year, and see sort of what the changes have been made. You know, I'll say, for example, if our projected numbers come back and say, you know what, this year we were anticipating, what, $1 million in transient occupancy tax. We've actually already collected $1 million, so we're projecting we're going to get $2 million. Let's update the numbers and see where we go from there.
Okay, so
Yep.
sorry.
Quick question, Kuljit.
Go ahead, Gary.
Okay, so in reviewing these numbers, are you doing it by time or by incident? Every quarter, every 6 months, or when something happens that's significant?
I would leave that to John and to the commission to determine sort of what the ideal time frame to really refresh the 5-year forecast might be. Quarterly might be too frequently, simply because you know, between, for example, between when we did the budget and when we do the mid-year budget, obviously we'll have had a quarter, but the numbers won't, you know, our numbers won't have, our data won't have changed that we've been working.
Yeah, I think 6 months on a 5-year plan is fine, even if there's an event, you know it's happened, but otherwise you're turning the crank every, 10 times a year maybe, or 20, and that's not right.
I would caveat if there is what I'd call a cataclysmic event, a COVID-19 pandemic that happens, say for example, in September, probably not best to wait until December, January to start, okay, well, let's take some actions. Probably is best to look at it and plan as quickly as we can, just so we're not caught behind and, we wait 3 months and now we're desperately scrambling around. But I tend to agree.
So can I just, so my kind of overall, I mean, if you presented this to council, I think it might say, okay, we are getting stable, things look good, we can pay our bills, except for one thing, which is that for the next 5 years, we are going to, if revenue or expenditures goes to our CIP budget, that's what we contribute into that bucket. That bucket had about $7 million before we hit COVID. And we were contributing 2 to 3 million into that bucket every year and spending about that much. But now for the next 5 years, we're going to contribute what we used to contribute every year. So that bucket's going to drain very quickly. And so that might be an intentional decision that the city needs to make about our expenses to say, is it okay for us to drain that bucket versus something else? So that trade-off should be made explicit as opposed to as an off P&L decision that happens automatically. I mean, this thing just makes it a fait accompli that we're going to spend less on our roads and things like that, versus a actual decision made saying, look, we're going to spend less on engineering because we want to, I just picked a random line, sorry, not to pick on engineering. Because we want to make sure that our revenue expenditures is at least $1 million every year. Right? So that is the key finding that the council needs to, I think, completely grapple and understand and be explicitly clear to them. Otherwise, the budget looks kind of stable. We look like we're healthy. Do you think that's clear to them? No?
I think you as a commission have done a fantastic job of expressing that position to them.
Okay.
I will not presume to speak for the council.
Okay.
John,
sorry. Yes, ma'am.
I will just speak for myself and say, I understand that very clearly, but I'm not sure that we can assume universal understanding, and it would not hurt to be explicit about that during the council presentation.
Yeah, so I think if you could show revenue or expenditures, maybe even just change the line to saying contribution to CIP or something, right? Because that's where that's, I mean, of course it's a rule we've made, but that's what we've been doing every year, and that's what we intend to do going forward. So maybe that might help trigger that conversation. Okay, so the question of legal being embedded in executive, I don't know if that's a strategy to be able to not sort of have a target on the city saying we have this much money for legal or what, but you know, that's kind of embedded in the notes. It's fine, but I think that's important to ask specifically why would that stay high when it was supposed to be a one-time effect. You know, should we continue to have so much litigation and things like that that we should continue to think that that's normal? Seems a little bit odd.
Yeah, I mean, Kuljit, on that one, I agree with you. I mean, and look, this has been bucketed to make it convenient. I do think the bucketing conflates controllable and largely uncontrollable, right? I mean, I look at the public safety line, I bet you couldn't move that by $500,000 if you wanted to. And frankly, the rate of increase against what's going to happen in wages looks a little aggressive to me. But I don't know why you'd embed that in there. I'm kind of disappointed in this run out because if you look at 18, 19, before we had this flare up, you know, this executive line was 8-9% of revenue. And now you guys are institutionalizing it at 14-15%. And having two things that I think you ought to think about is embedding professional fees in there. I just think it's not what belongs in there. And institutionalizing that elevated level, it's not super obvious to me why you're doing that. I mean, there may be eminently good reasons, but that's essentially saying you're never going to have that line with never being between now and June 30th of 2026, have it return to kind of historical rates of spend against the city's revenues.
I totally agree. It's almost saying that we intend to become a perpetually litigious community.
Yeah, so I mean, so I don't know what you want to call it, but John, I know our recommendation, of course, is to sort of bring some clarity and transparency to that line. You know, I mean, I think Tony's recommendation of not calling professional fees or whatever, so that at least there's a conversation about it, and it's obvious to, you know, whoever's going to see this besides the council, the residents, or whoever.
Mhm.
That would be our recommendation. We don't want to sort of tell you what to do with it, but at least the transparency is important.
Sure. Okay.
Does it make sense to have Does it make sense to have a special line item for legal fees so that we can track those, since they are becoming a significant portion of the budget?
So John, when we did the budget, when I raised this, I was told that that makes it look like the city has a target saying we have this much money come after us. That was the argument I was told when we objected to this jump in our budget this year.
Yeah.
It's a bad argument, though.
Yeah, I would not have a problem with splitting the executive into executive and legal, and breaking out the costs. I know none of this is directed at me, but in my defense, the reason why I did not presume that legal fees will return to where they were, say 4 or 5 years ago, is that's not my place to say that that's what they will do. And so my assumption, the safer assumption for myself was include the costs throughout. And then when we get the updated data and we see our legal costs have gone down, then we can bring them down, and then we can use that new point moving forward. But no, I completely understand the feedback. I understand.
Yeah, John, to be clear, none of this is towards you. And I know. You got Gabe and you have John on here, and I think they're now burdened. John now newly burdened with some, and that's why I said controllable and uncontrollable. Right. And I guess as a commissioner, I'd say, boy, that ought to be a controllable expense. You guys, as managers, we'd like to see you manage that down. Now, your point of, being from Missouri, and you'll take it out of the budget when you show them you can resolve the portfolio at a speed that's faster than new cases present themselves. That's a totally fair point too. I think you're just hearing from us, rolling it up and running it all the way out without expressing explicitly. I think that other people can speak for themselves, our strong hope that this be a pretty high management priority to avoid picking fights gratuitously, given how expensive they've been. And then there, there's a new team on the job, and at least from my perspective, that's the easiest money to go get on this entire sheet of paper.
Yeah, also even if it was any other line, if it's such a large amount, it's good to, relatively the other amounts are 2-3 million. If we kept it at that level of clarity, even like public safety, I think if we could break it up between fire and police, I think that'd be great to show that our, fire is an outside contract, and that's pretty stable. I think it'd be good to be able to break that out and show people, because everybody thinks that we're spending 23 on police. That's not true. That includes fire, right?
Okay.
Very good point.
And Tony,
not to beat a dead horse, but having this executive number go up so much so fast over the years, it's a target now. We made budget. Good news. We only spent $8 million on legal fees. That's the wrong mentality. I think not to set it as a target or wow, we made budget on spending on legal. That's
Okay. Any more comments or?
If I could just have a last point.
Please.
Rather than think that, the line item for breaking out legal has to do with trying to pressure anybody to reduce it or not reduce it, just show it for what it is. And if council wants to vote that the legal line will continue at its current level, then it's just an item that people understand and see instead of having it buried.
Right.
And let it fall where it will.
I would guess you'd stir up a lot of residents if they really saw this going from $4 to $7 million of legal fees a year, which wouldn't be bad pressure.
Because that's what it is.
I know. I know. So if you
but my guess is it's actually more complicated than that, guys. I don't want to poke John.
Sure.
My guess is there's fees and settlement money in that bucket, so it's probably incrementally more complicated, but the same issue.
Yeah. I think we've made our point.
Yeah. So I think I have four or five points. I think just to wrap, I think it'd be important to tell people, if you're showing this to the council, that this does not include another source of revenue, which is park and loop. It can change our history, change things. The executive and the legal, we've given you ample information on that. I think if we can actually break out public safety between fire and that might be helpful to really show that what we really actually spend on police. And then the CIP clarity on the fact that for the next 5 years, we're going to contribute what we normally used to contribute every year into that budget. So that's going to actually have an impact on the city services. Yeah.
Can the committee recommend that we break out legal?
I certainly do, but I think if John, you feel you want to take that message to the council, we are definitely in support of that.
Okay.
Do we have non-departmental? Do we use a non-departmental division?
The good question, John. And I apologize to the commission that we're bringing John up to speed during the commission meeting. That is
okay.
The non-departmental is included in the finance line item.
Right, that could be a way that we pass it out to have everything that's not covered within a division. We have it as on its own.
Yeah. So can you say more about? I just actually sorry. I'm so fixated on the executive. Finance is what? What's in finance?
Finance includes the non-departmental line item, which would be, as John has alluded to, is any sort of expenditure that is not included in, or that doesn't fall in any one department. So for example, the city contributes a dollar amount to the History Museum each year. Those costs are included in the non-departmental. As well, you know, contribution to CHAC, to the Chamber of Commerce, organizations like that.
It's your catch-all other bucket, basically.
Exactly.
Okay.
And it's going down from next budget.
I would have to look at the non-departmental line item
Okay.
to talk definitively on that.
Okay, thank you.
So if I could, just to clarify on in park and lieu, and I don't at all challenge the desirability of putting the park and lieu estimates in here if the commission wants to see that. I just want to be sure that everybody knows, and that's Art because he's new, that those cannot be put into the general fund. They are not.
No, Anita, I was making the opposite comment, that to make sure people understand that park and lieu is not in this.
Yeah, but I'm saying if you want to add park and lieu, I thought that you were saying it should be a separate line item. It needs to be differentiated because it cannot be spent for general fund purposes.
Yes, yes. That's why I wanted to be clear that that's a different, yeah, that's a different fund.
Yeah.
Right.
I don't object to showing it somewhere if we want to project it, because it does influence what we're able to do in the way of parks and things that might otherwise rely on CIP to fund park improvements can be paid for out of the.
Yeah, or the 600 some odd thousand of our mortgage. I don't know if that can be done, but it seems like maybe that's, if the community center is a park, the payment for that.
I believe the our new city manager is counting on that.
Yeah, that was from we were always told that park and lieu could be used to service the debt if the debt had been used to fund an eligible purpose. So that was always the backdoor way to make sure that was fundable.
Yep.
It's a lot of money, but we just need to be clear where it can be and cannot be applied.
And that's where the 5-year projections get fun, because, you know, for example, I can't remember the exact dollar amount, but if it's 600,000, you know, we can take it out of the transfers out, and now our numbers are, you know, it changes. And so that's, you know,
600 more for CIP.
600 more, and really is one of the things that I hope the commission and whoever may see this take away from this is, as we pull and push the levers and prod and whatnot, things will change, and of course it goes the opposite direction as well. If things are not as well as they are projected, then, you know, if our taxes, you know, our property tax comes in $1 million less, here we go. You know, then, oh wait, I'm sorry. If our property tax comes in at $1 million less, why then it becomes worse, obviously. Do all of that.
Yeah, no, it's a bunch of pieces. That's the only line on here. I'm with Kuljit. I'll take the over, but the rest of it's complicated.
And your other assumption about staffing levels, you're thinking we're fully staffed this whole next 3 years, 5 years?
I believe that is a good question. I think that the budget does not include, included some vacant positions, and so did not assume that it'd be fully staffed. But that is an excellent point, and that's one of the things that the council, the commission, the staff, we need to wrestle with, is, as we say, send money to PERS, which frees up some other dollars. What do we use those dollars for? Is it for staff? Is it for programs? Is it for maintenance of facilities? Is it for, what is it for? And, you know, we can work through those questions and decisions as we go along. But I do know that our new city manager is very interested in making sure that we have the right staff to provide the services for the community and not be chronically understaffed and overworked and
Yeah.
not able to provide the services that the community needs and deserves.
Yeah, I mean, and that could be we have I remember last we had about 15 to 20 unfilled staff positions. That's probably what, $1.5 million?
So it's not that high. I believe it was 5 or 6 positions that we did not budget for, or that we budgeted as being vacant. And I don't know the exact dollar amount. Is probably about 6 or 750. Was the amount.
Okay. Yeah, I mean,
now that's not to say that there's not been a time where we had 15 vacancies, because of course, we have natural turnover and whatnot.
yeah. So I mean, $700,000 is significant in our budget, So I think that's an important conversation to have as to whether should you be at least projecting either a re-understanding of our needs to say that for the next 4 years, if we don't fill these positions, nothing changes, or we should budget for it and push the department heads to fill those positions because we want that service.
Okay.
Okay, so this was informational, right? And it was not something we have to vote on. So we've given you a bunch of info. So hopefully that was helpful. What is is this going to get presented, or is this going to be a study session, or?
Well, the idea, or what we had brought up in the staff report was that we take your feedback, and then after the completion of last year's audit, when we have the actual numbers for last year, as well as some updated projections for this year, come back with an updated forecast and present it to you again then. And then I think it should be worked into when our budget conversations with the council, making sure that they see it and are following it and understanding as well. So that was
we'll see it before it goes to the council. We'll see a revised version of this before it goes to the council, you're saying?
That's always the intention.
Great. Thank you. Okay, now I'm sure we stole your thunder about the staff announcements.
No,
there might be more.
No, I appreciate the opportunity. Of course, you've met John. We also have a finance manager position that you'll remember was vacant. We have a new manager who starts on, John, I believe it's Wednesday. Is that correct? So we'll have another hand on board to help with all of this. And John and the new manager can really start diving in and helping build our finance department back. Was sort of asked at the beginning of the meeting, and I kind of deferred. Unfortunately for now, this will be my last time with you guys. Moving forward, of course, you'll be in the very capable hands of John and his team for future financial commission meetings. But I will say that I will miss you. It's been an absolute pleasure and delight and joy. And you guys are always fantastic to work with, and you always ask the right questions and get the good information out. And I of course have been very thankful to have the team who help provide the technical knowledge that I may not possess in answering those questions. So other than that, I don't believe I have any other updates. I think I've given more than enough updates for the commission tonight.
Thank you, John. You'll
John,
be missed.
thank you. Yeah,
Yes,
we'll
thanks,
miss
John.
you
The
a
last,
lot.
the last thing you needed was another after-hours meeting once a month, so we appreciate it.
Thank you.
Yeah. And John Furtado, I hope you take these meetings from your home office home next time. I know Walnut Creek is miles away. So.
Oh, you know what? Thanks, Cool J. You reminded me. Is stay tuned. We may be talking about whether or not meetings move to in person. The council has a
Yeah.
discussion item tomorrow night on their council agenda to talk about whether we continue virtual or if we go in person. And so there may be further information after tomorrow night as to what direction the council wants to go in terms of our meetings.
Good.
Can I recommend they try a hybrid model? Like today, I couldn't have made this meeting because I've done something to my foot, except for us on Zoom. So I think it'd be great if we can try a hybrid.
Yeah, that certainly is an option as well, and I think the council will consider that, and we'll see what direction they want to go.
Okay.
So thank you for reminding me about that, Kuljit. I appreciate that.
Okay. Okay, if that's it, then meeting adjourned. Yeah.
Thank
All
you.
right. We
Thanks
stand
again,
adjourned.
John.
Okay.
Great, thank you.
Bye-bye.